If you got anything that is of interest, put it up in the chat right now. Otherwise, I guess we can review yesterday's price action or even yesterday's trades that we took on stream, and then we can go into anything else that is of interest. But if you saw the video, you'll know exactly what I'm talking about. But we had NFP on Friday, dip lower, taking out the sell side here, and then we started to chop around right at the equities open. Now, when you have 8:30 news, we're going to treat that as our 9:30. Okay, so the entire kill zone, in a sense, is going to shift to the left. At least that's how kind of how I look at it. So this here would be 9:30, and then 9 o'clock would be 10. And you can see between 10 and 10:30, we already have an extended range from pre-market, right? So when you have consolidation like this going into 9:30, it's important not to chase price. So when price is in this consolidation factor, we have to be very careful, even though we have discount PD rates we can be seeking, that we're not chasing price as it continues lower. So stopped out sell side, ran up for buy side, and then we continued up. We had a 5-minute gap here, lining up with the order block. Took the stab long, grabbed the 20, and then we continued longer into the rest of the silver bullet hour, chopped around, and then right at London close, 10:30, dip lower, knocking out sell side, and then we created an inversion gap over here. Went long in here, and then rode that all the way up into the buy side again, as well as the previous day high. So what I talked about on stream was these inversion / BPRs that fill at the bottom of reversals. So when we have this kind of, first of all, you have to be anticipating some sort of reversal, right? So there has to be time associated with it. There has to be some sort of reference point as well, like we have to have buy side or wherever our actual drawn liquidity is. But when price decides to reverse, there needs to be, or not, it doesn't need to be, but a lot of times what you'll see is this very quick move down and then a quick move up, closing above that entire down closing range. So that would be your change in state of delivery, right? So preferably I want to see something like this. Now, when I'm treating reversal as a reversal, I also want to see a breaker in some sense form. So the last up 2 closing candles close through, as well as an inversion or a BPR at the bottom here. That's left unfilled, kind of as a breakaway gap. You can see the same thing over here, right? We have down closing range and the same exact 2 candles close above there, right? We have a breaker in here, inversion, breakaway gap, left down here, whatever you want to call it, and then we shoot back up. So it's good to study those if you want to look for proper breakaway gaps. What is time distortion to you? Does macro have time distortion that price will move after a macro violently? Although ICT has never like deliberately said what time distortion is, at least to the public audience, for me, I think just time distortion is kind of just this consolidation factor where price will wait for a specific time to move. So sometimes when, especially this can sometimes be seen on Mondays too, but on any day of the week in the morning, like sometimes we'll have poor price action going into the macro, and then the macro starts to move, and then maybe the reversal, instead of happening at 10 o'clock, happens at 10:02. Now that's not a huge difference probably for a lot of people, but that 2-minute difference after the macro is over, a lot of times we'll get consolidation for us to pair back up, which I think this is all in here is time distortion, right? This consolidation factor, although we were filling this gap too, but let's see right at 10 a.m. here, we're not really retracing. Oh, we are retracing, but there was no continuation up. So in order to pair us back up perfectly with time, price will go into these prolonged consolidation periods where we wait for a specific element of time. Like if we pause right here and then go to 10:30, like there's not a lot of price action in here that's worth trading, right? Then we wait for London close macro, then price comes down, spools, you can wait between here and here, right? Consolidation between here and here, retrace into a gap, and then we continue back up. So that's why a lot of times you don't see time distortion within macro time, because it's a very important time of day. Same thing with, you don't see time distortion happen a lot of times at 9:30 when that's the true open, or at 8:30 when that's the true open, because we need to see that volatility start to be brought into the market and then price react as a result. So, I mean, it's not something that's like I really care about, to be honest, to know the exact definition, but it's just understanding that consolidation will happen when time isn't completely aligned. Yesterday for the second trade you took, I was waiting for price to hit equilibrium of the price leg, and since it didn't, I missed the whole trade. Price hitting discount wasn't that necessary. For the first one or the second one? Oh, the second trade, I see. So second trade, equilibrium of the last leg. So I assume talking about like this, going dipping into discount here. If we're talking about this, then same thing with this leg here, right? So the reason, first of all, the reason we're not going to dip into discount is if we're creating this reversal and we close above the breaker, like in this case, that's going to be a very, very strong PD array, right? Especially when you pair it up with other stuff. So same thing like this, we have a fair value gap here and you don't see a retracement down into a discount leg at all. Now, if we zoom out here, we have this gap. I'm going to remove some of this stuff and it'll make a little more sense. We have this gap, right? We extend this to here. I mean, technically it's all the way down here, right? Then we trim it because it's been efficiently filled up to here, extend this out. Now you can see price coming up, working back and forth, back and forth, back and forth, all with candle bodies up until here. Right here, it closes all the way through and closes all the way back down. So now this gap has been efficiently filled, right? Now, if we look above this gap, are there any gaps above there? Not really. I mean, this is the largest one, but there's probably some tiny ones on the 5-minute, but really nothing that's substantial compared to this one. Excuse me. And then up to this high, we just have like space where there's just liquidity, right? So this is all efficiently delivered. So we can expect speed for 1. Now, if we go back to the 1-minute chart, we see the Judah swing happen where we knock out the sell side, right? Take out the sell side, and then we close above, right here, close above the inversion gap, right? So, and now if you're familiar with how stops are supposed to work, if you're in a position you want to place a well-protected stop, it's supposed to be below or above 3 PD arrays, okay? So one, we're expecting speed, so we're not going to see a lot of retracements once we want to get to where price wants to go, right? You can see in this leg from 1032 to 1043, very, very quick. We have 2 order blocks that form, and that's it. Very quick movement, right? Because there's no inefficiencies that price has to retrace from. So that's the first thing, okay? Second thing is, where's our stop going to be? Or where should price not retrace to? Okay, so after this candle closes here, and maybe after this candle closes here too, if you wanted to pull 50% and say, okay, I'm going to take a long once we dip into this bottom portion. Well, what PD arrays do we have in context that'll support us dipping all the way down here? Well, first of all, we have this bisi, or sorry, this sibi here. That's 1 PD array. We have 2 PD arrays here with the breaker. So that would be an order block, right? Change this to blue. That's 1. This is 2. And then 3 would be once we close this, I respect that, right? This becomes an order block as we close above it here. A bullish order block, okay? So you can see we already have 3 PD arrays. Once this candle closes, the 1037 candle closes, we already have 3 PD arrays below price, where price is not expected really to even close. I mean, and we have this gap here too that is now traded on top. So price really should not be closing below this area, right? And then if we draw our fib out from the low maybe to this candle, this is now in discount, right? So there's already 3 PD arrays above that that's supposed to support price. And Now we're going to try and take a long, and that price is not going to fill down here. Okay. So that's why price doesn't want to dip lower. And if you can see in this example here, if we pull it, we're already above 50% of this range. So that should confirm the market maker buy model with the first expansion leg. Whenever you have a market maker model and this first leg expands above 50%, that most times confirms it as the true, it's not going to reverse up here most times. But and the reason we don't have to dip into discount again is obviously we just took out sell side, so we're expecting speed and breakaway gaps to form as a result. So third repeated raise there is speed. We also have SMT between ES. So if you go over here, I was marking these out as we go, but between the 1009 and the 1033 candle, we have pretty substantial SMT between the lows. Okay, if you go back to NQ, this is the same SMT 1009 to 1032. Right, so bullish SMT there too. So a lot of stuff that shows that why price doesn't want to retrace into discount. There's a lot of strength, there's a lot of speed that's required, and we have time as well that price wants to spool. Now to jump to the next question, this is not technically a macro that ICT teaches, but this is a very important time that he does teach. So if you go back to the core content videos or even go to his execution videos from 2023, a lot of his silver bullet times or trades are framed around this time. Now this is exactly when London close occurs, right around between 10:30 and 12 technically is the larger time. If you look at Forex or you're familiar with Forex, we're expecting on a classic buy or sell day for that higher low to be put in between London close. So 10:30 to 12. So the 10:30 start time between 10:30 to 45 is what I look for this kind of similar macro signature. Now, I mean, you can go back and backtest it if you have access to macro review. You can go back and look at a ton of those pictures where prices, you can see there's an entry that occurs during that time, either towards the drawn liquidity or if the drawn liquidity has already been met, we're reversing, going back into the range targeting 20 to 30%. So it's definitely worth the study. I mean, same thing with this macro here and this macro here almost have similar purposes. If drawn liquidity has already been met by 1030, then 1030 will reverse. If drawn liquidity is met, then at 11, which we're expecting the AM trend to end either at 1030 or 11. So if it's ending at 11, then we'll see a reversal or continuation going into 11 a.m. So you can see we reversed here and then we continued up, but there's very few times where it continues going to lunch. So if you look at ES, obviously ES had not met their buy side yet from pre-market. So if we extend this out, that's also a reason why we're continuing going into lunch. Now, also mentioned this on stream yesterday. When you want high probability turtle soups, it's going to occur when we're taking stops out and digging into either a current time frame or higher time frame gap. So if we look at almost every single scenario where there's a high time frame gap or even a high probability turtle soup, we're digging into some sort of gap either that was not filled or was already filled. So here we have, obviously we're taking out sell stops, digging into an inversion gap over here, but there's also not a 3-minute, there's a 4-minute gap in here filling, also probably a 5-minute gap too, right? So multiple gaps we're taking into at the same time that we're filling or taking out the stops. PM session, I didn't actually look at PM session. There's really nothing clean in here that I'm looking at. Thursday price action, I didn't actually stream. When we have NFP week, it's expected that we have low probability in the morning session on Thursday. Obviously, with the news drivers, it doesn't really matter. We just want to see this kind of search and destroy conditions, and it's not really high probability at all. And so even with the 10 a.m. news, distributes lower, fails to sweep on London low, comes back up, sweeps buy side, sweeps sell side, failing to sweep London low again, buy side, sell side run. Very, very poor price action. So when you're looking to trade NFP week. So something like last week, Monday is tradable, unlike most weeks. Monday actually is tradable on NFP week. Tuesday, Wednesday in the AM session is typically your last kind of point of interest where you want to be in trades. Wednesday PM sometimes becomes rough. You also have to look at the economic calendar and make sure we don't have FOMC. Then Thursday altogether, even if there's news drivers, I like to avoid them. Then Friday post NFP, meaning after 8:30. Then you have the 8:50 macro, 9:30 volatility injection, 9:50 macro, 10:30 macro, 10:50 macro. Okay, so when we're looking at Silver Bullet, or even just looking at the AM session, there's about six, I want to say six, max seven, maybe six windows of opportunity where you can get in. Okay, so assuming we don't have a crazy volatility like this, like a NFP, but I mean, even a red folder at 8:30, sometimes they're tradable. But you have around seven. So we have one, which is a volatility index. Sorry, not volatility index. Volatility driver at 8:30. That's one trade setup. Two would be 8:50 macro. Three would be 9:30 volatility injection. Four is this macro here, 9:50 macro. Five is the 10 a.m. volatility injection. Six, this macro in here. Seven is this macro here. So we have seven kind of picked out times where we want to be looking for a trade setup, or slightly before it if we're looking at volatility driver to create the setup, right? And that's really, I mean, seven setups in one session and you can't find one. It's either extremely low probability or just in a day that you don't want to be trading. So I would say if you're looking to form a trade in the AM session, base it on one of those or try and form it around one of those. Now, if we're looking at the higher time frames, I think you should still always base your AM trades based on the 15-minute. That's my personal preference. There's always going to be some sort of setup in New York, assuming that London has not expanded. And it's all based on the fact that we'd like to see some sort of reversal happen within one of these three kill zones. So if there's a reversal happening in Asian range, then when can we see New York expand? I don't know where I'm going with this. If Asian session reverses, same thing with any of them. If Asian session and London session reverses, and we have a change in state that's then held and respected for the rest of the morning session, going into 8:30, we'd like to see 8:30 expand and continue. Like if you look down here, right, we have Asian session trading lower, London session puts in the low at 2 to 3, and we expand up here, creating a breaker with this up closing candle here, right? Extend this out. Then going into 8:30, obviously this is a Friday with 8:30 news, but you can use that in context with this reversal that we're not going to take out this low, right? And then we either sweep stops. Now, there's going to be, typically what you see is there's going to be three kind of windows of opportunity to look for stops, stop runs. That's either going to be at 8:30, 9:30, or at 10 a.m. So what I do is, for my pre-market kind of routine, I'll go into the marketplace, I'll look at the hourly. I'll glance over the daily and the weekly, but for me, obviously, it doesn't matter as much if you're scalping intraday, although it does help. Okay, where's the daily likely to expand? Where's the weekly likely to expand? But, excuse me, I just like to rely on the hourly for change in state and the 15-minute for the actual kill zones. So for me, weekly profile is the one thing I'm looking at for the higher time frame. So I don't really care about the daily. I don't really care about the weekly. I'll glance at it on Monday and throughout the week, but it doesn't really matter. So you have to understand that whatever your model is, there's got to be some sort of a top-down analysis. If you're just opening up the charts at 9:30, looking at it right at 9:30, right, and we just have the 1-minute chart in front of us, obviously, yeah, you're going to be able to find some setups, right, that may play out, but it's not going to be, you're not going to feel as confident as you would have been if you're looking at higher time frame charts. And that could be the 5-minute, it could be the 15-minute. But don't neglect those higher time frame charts just because you're glued on the 1-minute or you're glued on the 5-minute, because these ones, every higher time frame PD array is going to take priority over a lower time frame PD array, right? So why would you be trading a lower time frame PD array if you don't know where these higher time frame charts are going to go? So for me, I have the hourly chart pulled up every single day, looking at the weekly profile. Now, if you saw AM Trade's video on the weekly profiles, or even ICT's videos on weekly profiles, I think those are very important. They're not talked about a whole lot, and they definitely are confusing. But if you have time, like 2 hours in a day, you could watch both videos, take notes on all of them, and you would understand them, I think, because it's just a pattern. You don't have to understand it in real time. Every single day or every single week start, you just look at the marketplace and just kind of compare what we're seeing here to your notes. Just hold it up side by side, and you're like, all right, Wednesday reversal. I expect Thursday and Friday to continue in the direction, and Friday to close near the weekly close. Okay, so you have that already in mind. Then what I look for is the 15-minute. We're dropping down there. Then we have, okay, is the hourly likely to expand in one direction because of the weekly profile? If not, then we're just looking at the intraday price action. Okay, so Wednesday was a great example. So here we have Asian consolidating, very, very clear consolidation. If you want to look for more specific consolidation factors, look between 2130 and Asian close. So that would be 2130. I'll type it in chat. A lot of times there's a lot of consolidation that happens between those two specific times. Then we're going to be looking at London reversal. So you can see consolidates, we trade up, tap into a gap here, right? And then we displace very, very quickly to the downside, creating a breaker. Now I have this kind of breaker outlined with this, I'll make it into an order block here, extend that out. So we're expecting price to either retrace into the breaker and give a low risk opportunity entry, or just respect this gap and continue low. You can see right at going into 830, we have, like, if we just drag it like this. Okay, so we're trading into the breaker there. Candle buys are closing below, right? That's a good sign for bearish movement. We have this lowest target, extend that out to this lowest target, and any discount PD rate below that, which I have the 15-minute gap marked out here. So then what are we waiting for? 8:30, 9:30, or 10 a.m. to bring about a sweep of the buy stops if we're bearish in this case. We're going to look at those 3 times specifically. If not, then there's no trade for the day. So you can also use your economic calendar for this too. So on Wednesday, we had an 8:30 news driver. So if we go to just pan over here, actually, let me go to the 5-minute. You'll see a little bit clearer. Here you go. So obviously we extend that 15-minute order block out. 8:30 news. You can see it right here. Maybe you can't. This wick. This one right here. That wick, what is it doing? Clearing out relative equal buy side, right? Boom. All right, so 8:30. So when we have 8:30 news, we're going to be up at 8:30, and we're going to be looking at our first window of opportunity is 8:30. The 8:30 news or the 8:30 volatility. For me, I don't really like trading volatility just because stops have to be a little bit wider. Not my personal preference. So I'll be looking at 8:50 macro. Now if we drop down to the 1-minute and go back. Actually, not on this chart. Let's go to the 1-minute on this one. Scroll back to Wednesday. Thursday, here's Wednesday. So on the 1-minute, right, it doesn't really, it's not as clear. Maybe like if you were just stuck on the 1-minute, okay, price is going to retrace up to London high, or we're going to continue this reversal. It looks very strong. But if you don't have the higher time frame context, you're not going to understand what's going on, right? So if you look here, I still have this marked out, but buy side swept, and then we start trading back lower. You have a breaker formation that forms in here, right? High, low, higher high. We can take this, these last down closing candles, right? Technically, you can use all of them. I just like to use the last one or the lowest two. Take this, we extend this out. That's your breaker. Now we're waiting for time to enter. Okay, where's 850? 850 macro right here to right here. What are we doing? All right, we just took out short-term buy stops up here. I mean, long-term buy stops. Took out a short-term buy stop right here. Buy side. Trades back down. And then right at 850, we have a tiny, tiny gap right here. I don't know if you can see it. But there's a tiny sibi right here. Or even if you wanted to trade it right before the macro, which I wouldn't, but there's a gap here. We could also be trading into short, short. We could be trading any of these candles in here that all are respecting this inversion gap, or even if it closes below, that's a shorting opportunity. And you can see all these really produce 20 points, and that's your minimum. 20 points there, 20 points from the inversion gap, 23, okay, 20 points. And if you do the math, people are wondering, right, okay, what's the significance of 20 points? Theoretically, in a perfect world, if you captured 20 points, which is $400 per contract, per mini contract, right? 400 times 250 trading days, that's 100,000 for the year. So that's kind of like the perfect scenario, right? But I mean, just looking at it, going back to this, sweep a buy side with the context of 15-minute, entry there, entry there. All right, so we didn't wake up in time. We missed it. What are we looking for now? 930 volatility. Extend the breaker out. Extend the rest of this gap out, actually. This is where ICT went short in his video. How did he know it was going to sweep buy side and continue lower? I just gave you the analysis why. Right, so you can anticipate the sweep of stops trading into a gap. There's your 930 entry, right at the 930 volatility. You can see right at 930 volatility, we're also taking out short-term buy stops too, right? You can also be anticipating a buy stop sweep, a turtle soup, since if you zoom out here and take the high to low, we're at 50% of the market maker model, right? So from between low and high, at 50% of a dealing range, we're expecting consolidation. So when price is consolidating like this, we can expect a Judas swing on the upside and then continuation lower. Don't take my word for it. If you go and study all of your market maker screenshots, if you have them, and then look back at the 50% consolidation factors and then look for a buy side sweep. It could just be a tiny one tick above a consolidation, but this happens more often than not. 930, here's your sell side, by the way. Be targeting. 930 creates an entry point. All right, what's the next one? 950. Okay, so we have another breaker here. We have the low, sorry, the high, the low, and the higher high that swept out liquidity, right? Trades back down, confirms it as a bearish order block, a bearish breaker. Here's 950. Retraces up into premium of this daily range, into the breaker, into, an order block, tons of stuff you could be using to go short. Boom, right at 955, trades lower, and then all the way down 55 points, 53 points down to the sell side, going into 10:30, which is expected to create the low of the session, or even 11 a.m. So Wednesday was probably my favorite day of the week just because of how precise it was. But you can see, I mean, now that we're in February, you're going to see a lot of this high probability stuff happen, and you don't want to be missing out on this kind of stuff, right? But you can see when you frame it from top down, it becomes very easy to identify where price is likely to go. And we can do the same thing for Friday too. Actually, let me leave all this on. I'll give you a chance to screenshot of this if you want. So if you want to screenshot this, or I'll screenshot it for you. Send it into here. You go to Friday now. If a breaker forms within the macro, but it doesn't give an entry until after the macro, do you still do the trade? No. If there's no entry in the macro times, I'm completely just out of it. If it runs without me, it's perfectly fine. But then there's always a next macro, right? But most times the macro will create the entry because that's when time is important. So in here, I told you we're expecting a reversal in one of the three kill zones. Okay. So we have consolidation. Consolidation. Do we see a clear breaker form? No. So we're expecting a reversal to happen in the New York session. You can see we are dipping down here into discount of this current dealing range. Just missed it, actually. That's annoying. Anyways, we're retracing down into this gap that formed on the close. So we're tracing there, right? What are we expecting? So if we already had that analysis in mind, okay, we don't see a clear reversal, we don't see a breaker forming in either of these two kill zones. What do we need to see? We need to see a reversal and the stop sweep at one of those specific times, right? Okay, so what are the 3 times? 8:30, 9:30, and 10. Those 3. We drag this over. We have NFP. So 8:30 sweep stops. Now are we using that? Do we see a breaker formation happen as a result? No, we're not closing above anything, right? This would be the breaker up here we need to see. So we don't see a breaker. Okay. Are we sweeping out any relatively equal lows? I mean, we are. We have relative equal lows there. We're sweeping with stops, but we don't see a breaker form. So what are we waiting for next? 9:30, right? So we drag this over. So you could do it right at 9:25. Right at 9:25, I'm marking out the buy stops and the sell stops that are most obvious. So if we go to the chart, or actually if you scroll this over, so here is 9:15. Next 15-minute candle low perm will be 9:30, right? So if we extend this a little bit, I don't want to drag it over, but you can see, okay, where's the most obvious buy side? Where's the most obvious sell side? Most obvious buy side, you'd be using this right here. I was just using this. Both of these marked out right before the stream. Most obvious sell side, I mean, would be down here technically, right? But we don't need to see this swept out for us to create a reversal going to the rest of the morning session. So for me, it's just going to be the low of the session. This low that was put in the 8:45, right? Now, if you can see, okay, we're waiting for 9:30. Go back to the charts. We'll have this buy side marked out, right? That was the one we had in the 15. And then the sell side, the relative equal lows going to 9:30, right? So we don't have a breaker formation that formed at 8:30. We're waiting for 9:30 now. Sweep of sell side, trades back up, breaker formation. Now I didn't actually get an entry. We don't get an entry on this. You could actually be using this wick lower. This is really the only entry I see. Very difficult one if you're not familiar with it. But we have an inversion gap here. And then we have the wick of the breaker, or the wick of this down closing candle. Very difficult entry. I did not enter on this. I probably would have missed this for sure, but still has an entry given on this 936 candle. But then what are we waiting for? Okay, we're waiting for the macro now. Now if you zoom out to the 5-minute, we have this 5-minute breaker, low, high, lower, low. We extend the order block out. You could be using the breaker order block or this down closing candle. I extended out the down closing candle, and then we also have a gap here. Now we can use the 950 macro to go long, and then we bounce off this. I actually just entered on the 955 candle. I'll show you the execution. I just scalped it for 20, but here's the execution taken from the stream. Right in there, I'll post it up in chat. Went long, 20 points, and I was done. But you can see we still kind of just meandered around here. We didn't really close below this order block at all. Then next, kill zone, 9:30 or 10:30, sorry, entered in, took long. So I'm telling you next week, now the days you don't want to be doing this kind of analysis is on a Monday, because Mondays will create very poor price action. So typically you can just skip Mondays. Like if you go to Monday over here, it's difficult, like in here, right? We have Asian, London, a reversal right before there, and we can see the speed below, closing below this last down closing candle as your breaker, right? Now, using the volatility injections as our context, we don't have anything here. 9:30 shouldn't take out this high if this is the reversal leg, right? It shouldn't take out this high, but that's the reversal leg that's used. So that's kind of why you want to avoid Mondays. It still works, but it's difficult. Hold up. I said to get some water. So yeah, it's not as precise. Like you can still see we're taking out buy stops here. And if we go probably drop down to 1 minute, we probably still have an entry, but it's not the cleanest. And we aren't dipping into a discount PD rate either. If you take the low to high from here, definitely not in discount. So avoid Mondays when you're looking at this kind of analysis. It works best on Wednesdays, Thursdays, and Fridays, especially if you can frame a weekly profile around it. But yeah, that's kind of like the secret sauce, I guess, for the macros is to have a top down, and it becomes very easy to read when you use that kind of analysis. Even in here, right? What do we see? We see a London reversal, trades up. We got the breaker. Okay. That we're looking for super sell stops at a specific time. Now you could use this 830. This is internal range. Typically want to see this low. 830, probably have a scalp. You can go long somewhere in here. Still 34 points, but we don't have. You could treat that as the true open. Anyways, 9:30 sweep stops. No. 10:30, 10 a.m. comes down, sweeps out all these lows, and takes out this low here. Trading back into the range where we're trading into a gap as well. So that's what you want to see, right? With turtle soups, you want to see us trading into a gap. 10 a.m. Okay, so we can be looking at the last 10 minutes of the 10 a.m. macro, or we can use 10:30. But we have to be careful because if our drawn liquidity is met at 10:30, then we'll see consolidation like this. But if we go to Friday, January 26th, and look at the 1 minute chart, it's still marked out perfect. Sell side swept. I had this marked out. Turtle soup right at 10 a.m. trades up, and you can see the same exact thing here, right? We have that inversion gap that's formed at the bottom, right? We're very quick down closing candle, quick speed up, and we can use that as our entry long. You can see we trade up above the breaker as well, so the low, high, lower, low, extend that out. Entry here, it is at 1023, so I probably would have missed this, but if you're looking at silver bullet, nice long opportunity there, and shoots up all the way to the buy side. Excuse me. We actually do have an entry given here too during the macro, London close macro. So within the time, we have a gap, inversion gap over here, and still a 20-point run up before it starts to reverse, obviously going into lunch. So that's kind of my daily analysis, and you can find it mostly a trade every single day besides maybe a Monday using that analysis. Even the Mondays you can still find a trade, but it's just difficult. It's mostly scalping. But what is that? So hourly, I'll type this up in the chat. Hourly weekly profile or change in state is what you're looking for. Where is it likely to draw? We're looking for a 15-minute stage of delivery. And where did the reversal happen? And then 5-minute buy side / sell side. Sweep at a volatility point. So that would be 9:30. Sorry, 8:30, 9:30, and 10. Anything after that, low probability. And then we're using 1-minute macros. So there's a full model if you want one. That's kind of the full model that I use personally. I don't really think you need anything other than that every single day. There's most likely going to be a trade setup just based on that. I think it's the easiest way to look at the analysis because you have every single aspect of a high probability setup all in there, right? We have higher time frame analysis. We have a reversal stage of delivery where we're expecting expansion afterwards. We see a breaker formation form, so there's a unicorn in there too. We're using time to enter macros. So that's a very, very high probability, um, I think, model that someone can use. I think that's all you really need, to be honest. Obviously, the same thing works with the PM session. If you can only trade the PM session, um, you can look at it. I would say study it. It does the same thing that the New York session does, but if you had to study it, I would say watch the um, index trend video. I think it's from either month 10 or month 7. I'll send the link. I'll send this little thing in chat if you want to study it. I think it's called index trends or index setups. Study the PM session if you want to learn more about that. I'm personally not going to trade the PM session, but there's still macros in there. There's still volatility injections that you can be using. I would study 1:30, 2 o'clock is probably your 2. Obviously, then you have the 9:40 or the 15:15 to 15:45 end of day macro. That's where we're just going to spool either towards untapped liquidity or fill a gap that hasn't been filled for the rest of the day. But I think it's a very useful study because you can also use that kind of analysis in forward testing too. So if you have FX replay or if you have even TradingView replay, although it's not the best, you can still probably do this kind of analysis. Now there's going to be fluke days, but that's why we're going to anticipate using the 1 hour. So in this case, Tuesday putting in the high of the week, we don't really see a reversal in any of these. Like I don't see a clear reversal, right? But if you're looking at the weekly expansion, we're expecting Tuesday to put in the high of the week. So this is going to be a difficult day to trade. Monday and Tuesdays are going to be difficult compared to the rest of the week. Monday's going to be most difficult. And then I would say Tuesday then after that. But Tuesday, sometimes you can find a trade setup. Now, use that same kind of analysis, right? Don't see reversal. Don't see reversal. You have to look for SMT too. So we could see SMT between highs and lows sometimes. But if there's SMT, look for the SMT. Otherwise, we'll look for reversal. And then same thing, volatility injections to be looking for the super liquidity. 8:30 doesn't show one. 9:30 clears out the relative equal highs. Now, I like to use the 5-minute to study the sweeps of liquidity. So I use the 15-minute, then drop down to the 5-minute. It's pretty easy to mark out the buy side, sell side before 9:30. So we have obviously relatively equal highs in here. I told you the highest probability turtle sweeps are going to happen when we're digging into a gap, right? So here's your gap right here. Didn't fill that. 9:30 does this a lot where we're sweeping stops and filling a gap. And then if you drop down to the 1 minute, what was that, Tuesday? $9.36 highs right in here. Waiting for the macro time. Now we also have 10 a.m. high volatility news driver. So you could be avoiding this macro. You could see how actually rough price action is with how many wicks and everything that's forming. So it would be difficult. But if you were very confident in this buy side sweep and we continued lower, you could actually use the macro as an entry point using the volatility. But otherwise, you'd be looking at 10:30. You could see we take a buy side here, form a breaker in the sense of we're trading back lower. I mean, it's difficult on this day. I mean, the AM session really does not provide a whole lot. Going to lunch, we do see expansion in lunch, which is odd. You can, I mean, if you're familiar with price action, this is very, very poor. Right? Wicks back and forth, volume bounces forming, expansion during lunch, continuation after the market. So, but anyways, obviously, so using ES and DXY too, if you don't see a reversal happen on NQ at one of those volatility injections, look for the SMT. So right at 925, you should be comparing the highs and lows between ES and NQ. I mean, you can do it on YM. It's just YM is not as reliable when we're looking at clear reversal SMT. I like to just use NQ and ES. If I have to say, if you were to pick if you're very new and I'd say to pick which one are you going to trade. Pick ES in the beginning. NQ, although it is quicker and probably provides more opportunities, the precision on ES is very, very clean. Like you want to be looking at something that precise in the beginning where you can get comfortable and familiar with what price actually does. Then you could be looking at the kind of anomalies in price and the framework that's supposed to happen on NQ, but still able to capture stuff. So if I had to pick for you, or if I had to suggest something, if you're new to ICT concepts or just new to studying the charts, look at S&P, look at ES, use NQ as SMT. So look for the highs and lows and what we didn't sweep, what we did sweep, things like that. Then use DXY as kind of a strength filter. So if ES and NQ are both somewhat selling off, but we don't see inverse replication or inverse correlation on DXY. That's just fancy terms for it's not doing the opposite. So if ES and NQ are trading lower and we're looking for a short setup or something in the macro time, but DXY is not popping up, I would be hesitant in taking a short. If I see NQ and ES start moving lower at that same time, DXY has a huge spike up, taking out new highs or filling a gap or something, spiking up, I feel more confident taking that trade. So ES and NQ as a strength as a DXY, I can't speak. ES and NQ as a SMT between highs and lows, especially at specific times. So all those important 30-minute intervals, 8:30, 9, 9:30, 10, 10:30, all that. And then DXY as a strength filter. So if there's a setup we're looking at taking and we're kind of hesitant and looking at it, we take a look at DXY to make sure it's doing what it's supposed to be doing. If they're all paired up, so if ES is moving up, NQ is moving up, DXY is moving up, low probability conditions. Same thing with if the indices are misaligned. So if NQ, ES, YM are all kind of doing their own thing, like if ES trading up, this one's trading down, this one's like just chopped around, it becomes low probability. Okay. So if you have any more questions, you can put those up in the chat. Otherwise, like I said, I'm not going to take too much of your time. Just wanted to share that kind of stuff based around the model because I think there's a lot of stuff that's important in there. And for me, it was difficult to form a model. I think that's one of the hardest things in ICT trading is that he gives so many tools. He gives you a whole arsenal of weapons to use. And you have to just pick one. And sometimes you get caught in that, what's the shiny new object? What's that? What's the new thing that I can use in my tape reading? When really, once you study enough and you feel comfortable with reading price and you can see the stuff that he's talking about, or maybe if you watch his trades and they make sense, but you can't replicate it in your own charts, focus more and more on forming a model, and it should be a top-down analysis. So the one that I just gave you, if you want to use that, that's perfectly fine. I think that's really everything that you need, and it's very useful to study those because it incorporates everything that I think is high probability. You could also, instead of using the macro to enter, you could just use the silver bullet to enter. That's a huge time window there, but you have to frame a higher time frame context. Like if you're studying, at least for me, when I first started studying silver bullet in 2023, I was just so focused on that time aspect, right? Because he finally dropped a more specific time rather than just the entire kill zone. So I would just be studying the 1 minute price action between 10 a.m. and 11 a.m. It would be so difficult to frame something. Yeah, draw liquidity over everything. So you need to understand those higher time frame contexts and what we've been doing, what we're expected to do, and where we can enter in between that. So yesterday was a low probability day for DXY SMT. Yeah, if you're using DXY as SMT, I don't really personally do that. Like highs, comparing highs and lows kind of thing. But just for the current candle, like for trading up. So in this case, you can see after really like after 10:30, that if you go back to the stream recording from yesterday, you can see I was kind of hesitant taking a long at 9:50. So yeah, this is kind of a poor probability day, low probability day, right at 12:10. I would say after that. I mean, even here trading up substantially is difficult to use, but just going off the price action here, I thought it was fine. Obviously, it's not going to be, oh, excuse me, it's not going to be the end all be all. Like if it's not doing perfectly what it wants to do, but there's still super clean price action, we're not going to not take a trade. But it's still kind of, like I said, the strength index for me. Like what are we expected to do on DXY? Is it doing it, or is it completely doing the opposite? If it's completely doing the opposite, it's very low probability. What's throwing me off with indices trading is position sizing. Minis aren't flexible. Any hints? There is a micro. There's opportunity to go into a micro contract. So with this is NQ, right? So this is your mini contract. If you want to go down, you can go to MNQ. This is your micro E-mini NASDAQ 100 index futures. So you can go to either the current contract or the rollover contract. Excuse me. So if we're looking at NQH 2024, just go to MNQH 2024. Same chart for the most part. The exact prices are not going to line up. So if we're on like I don't know, like 17,490 on NQ, we may be at 17,480 at MNQ. Doesn't really matter because it's still going to move the same, if that makes sense. So if NQ moves 10 points, MNQ is still going to move 10 points. It's just the exact price labels are going to be slightly different. But you can see it's still the same exact price action, right? CPI on sell side, macro, all this looks the same, right? So minis will be, I actually have a whole entire video just based on this. Let me send you the link. I'm sure it'll probably help. It's like a 16-minute video. It goes a little bit more in depth about futures contracts. But yeah, this is 1/10 the size of a mini contract. Here you go. Here's the link right here. So this is, so for every 20 points, instead of 400 per contract, we're looking at 40 per contract. So it's not going to be perfect like Forex. Like Forex is going to have a very specific, if you want to risk 250, you can risk 250, right? And that's why risk to reward ratio is very important. Yeah, no problem. But if we're looking at futures, that's why I said it's not really important that you trade R. It's more that you just capture your target and look for scalping, have a high strike rate over Rs. So yeah, you can have 10 micro contracts for every one mini contract. And it's obviously much easier to manage risk when it's low. 1 to 3 will get you the promised land. I agree. Yeah, I think 1 to 3 micros, even on any platform, will do you wonders. I think it's obviously best to start off with the lowest amount of risk and then work your way up. Yeah, I agree. The R, that's why R matters so much, I think, in Forex, because you can know exactly how much you're risking and exactly how much you're going to take profit at. And that R makes it very easy to trade. With Forex or with futures, obviously you're going to know your stop loss, but in like some scenarios for me, I'll have a very few scenarios, but I'll have a trade where it could be a negative R, where my take profit may be 20 points. I only want to scalp 20, but the stop could be also 20 points, or the stop could be 25 points. Now, someone who's probably traded Forex would be like, okay, what the heck is that? Why would you have a negative R? But when you're confident with the macros, when you're confident with your model playing out, and you have a high strike rate, that negative R doesn't really matter as much. It does matter, but not as important. 30-point stop on NQ is chill with 1 to 3 micros. Yeah, I think that's, like, as a hard stop, I think that's perfectly fine, right? Especially, or actually maybe excluding high volatility days, but when you're looking at NQ, 30-point stop is probably all you need. But I just like to base it on the PD raise. So when I entered long here, my stop was at this low, which probably was what, like 32 points from the low. So and my first partial was 20 points, and then this high, and then this high. it just gets some taking used to. But yeah, watch that video. If anyone's trying to switch from forex to futures, watch that video. It's like 17 minutes long. Um, if you have any more questions, you can either leave them in the comments or just shoot me a DM personally on Discord. I'll be more than happy to help you out. But I think we'll try and wrap it up there. If there was anything that I missed, I apologize. Um, this is all recorded, so I will upload this either later today or tomorrow, depending whenever I have time. I want to try and post it whenever it's done rendering. But yeah, I'll send that link out to YouTube vids. But if there was any questions I missed, shoot me a DM. I'll be more than happy to help you out, or just leave a comment on whatever YouTube video you'd like. I'll make sure to check those. If I don't see you on Monday, have a great rest of your weekend and week. Good luck, good trading. These backtesting streams are always held on Saturdays, so should have one, Lord willing, next Saturday as well. But take care. Enjoy the rest of your day. I will see you guys soon. Peace.